A Trump election win. Implications on investing in Canada and the US. Proud dad moment. How a mechanic from Montreal, 33 years old, bought a BRRRR, buy, renovate, rent, refinance, repeat property in Memphis, Tennessee from a home. All this and more on this week's Truth About Real Estate Investing show. Howdy, y'all. This is Erwin Cito here, your podcast host and producer since 2016. There's been over 300 past episodes of this show, and you wouldn't believe it. Today's guest has listened to every one of those episodes. Anyways, as always, I won't comment on politics because I believe talking about politics are like arguments. There are no 100% winners because even if you win an argument or who you voted for wins, you have likely damaged the relationship with the person you're arguing with or those who voted for the other party. While I do believe both Trump and Harris had positives in their policies, both had absolute negatives, and I feel really sorry for those who feel hurt by the election outcome. Where I do choose to focus my attention and energy is how I may help my community of Canadian real estate investors, including especially my clients, and and many have asked me my opinion on the election results, and there are, of course, implications on Canadians investing in the USA. The overall investment landscape for the Canadian everyday real estate investor has not changed. The US economy is the envy of the world in its productivity and growth. If anything, that will accelerate under a business-friendly environment versus the raising taxes policy that was featured heavily in the Democrats' election promises. We at Share, the easiest way to build a portfolio of fully managed U.S. rental properties, we focus on business and landlord-friendly states. So those are generally red states. Some of them were actually under Democratic control, and actually they've pretty much all flipped. There's a lot more of them that are now red states. So some were borderline. Now they've actually gone more red, more Republican. So our investments should actually perform better. Trump has promised to bring back to America even more jobs in manufacturing by applying tariffs to imports, which will only see increased demand for our rental properties that are already located near domestic manufacturing because they're in business and landlord-friendly states, which is pretty much where all the growth of manufacturing and new investment exists. For example, Share recently expanded to a geography to North Carolina, specifically a deal in Greensboro, North Carolina, where Toyota is investing a historic $13.9 billion to create 5,000 manufacturing jobs. This is the world's largest automotive manufacturer, the first ever Toyota battery plant in America for hybrids and EVs. This is the first ever for Toyota. So again, this is one of the biggest, if not the biggest investment in North Carolina state's history. Now, speaking to the real estate deal, this is a seller leaseback deal, as in the seller the seller will be staying to rent the property. So for the landlord, there's no upfront vacancy, and the investor can defer some of the initial renovations while locking in today's price. A win, since the market is expected to go up as interest rates are expected to be cut further and possibly more accelerated under this new government regime. The investment property is a single-family detached house, 4-bedroom, 2.5 bathroom. It's over 2,300 square feet, built in 2012 for $252,000. I haven't done the math yet, so I'm actually going to break open my calculator because I use calculators because I'm not that good at math. So that's $252,000 divided by 2,349 square feet. That's $107 per square foot for a house that comes with land. Yes, that's American dollars. Now, there are expected renovations of $38,000. This is a BRRRR project. The projected rent is $2,190 plus utilities. Estimated appreciation on this property. Now, I don't know why people say this, but one of the objections I always hear about America is that there's no appreciation. Well, again, this property is located in somewhere business-friendly, landlord-friendly, with historic amounts of investment going nearby to create 5,000 new manufacturing jobs. So the estimated appreciation for this property is 4%. And if for those who know cap rates, so those who are at least an intermediate level of real estate investor, you know what a cap rate is, the net operating income divided by the price of the property plus capex, 5.6%. Now, find me something like this. 5.6% with all the benefits of being in a landlord-friendly area, so landlord-friendly rules and regulations, no rent control, where non-paying tenants can be evicted in 30 to 60 days. Find me that in Canada, right? And also, we got appreciation and upside. So I got the full details in the show notes. And if you're interested in seeing the numbers on this deal, just simply go to iwin.sharesfr.com. Again, that's iwin.sharesfr.com. In my 20-year experience of being a landlord, I do believe it is in every Canadian's best interest to be a real estate investor, first of all, because it's I've never seen so many people who weren't rich become rich in this asset class, in any asset class other than real estate, at the same rate of success, and to diversify to the U.S. as because there's cash flow and landlord friendly benefits. Shared deals to me should be every Canadian's baseline to compare against their future investments. Whoever owns this property in North Carolina is likely to be a winner. And again, that only improves with a Trump victory. Again, it's not an endorsement of President Trump. This is just what this, again, I'm just talking about implications to real estate investors. Unfortunately, a Trump government is not good for the Canadian economy. I know some may disagree with that. If you want to disagree, like go ahead, go argue with the way that our Canadian dollar is going right now. But fortunately for us, our dollar is faring better than the euro. So we're doing better than Mexico, China, basically better. We're doing better than the rest of the world since we're already major trading partners and we're so intertwined with the Americans. For the Canadian real estate investor, yes, the decline in the Canadian dollar hurts, but again, we're investing in red Republican states. Our mortgages and rents and expenses, our cash flow are on all US dollars. So again, earning US dollar cash flow beats not earning cash flow, which is common for Canadian real estate investors, local Canadians investing in local real estate, or significant negative cash flow. And still, a US investment property is better than a Canadian investment property. Please don't take my word for it. Do your own research. I've actually included a nice summary of my research using the latest version of ChatGPT 4.0, whatever that letter is. Anyways, I have a screen capture of it in my show notes, and I posted it on my Facebook. I simply asked ChatGPT, assume you are a real estate professional. Does any town or city in Canada rank ahead of the top 100 American towns or cities? Factor in mortgage financing, how Canadians have to personally qualify versus Americans, they use debt service coverage ratio mortgages. Include economic fundamentals and landlord friendliness. Because AI can be a little bit verbose, I asked it to answer in 10 words or less. ChatGPT's response, no Canadian city surpasses the top 100 US cities in these factors. Can we stop the debate now? I asked Google's Gemini as well. For those who know and follow, Google was a major donor of the Democrats. Anyways, so I asked the exact same question of Google's Google's Gemini. Hopefully Google didn't hear that and get mad at me. Anyways, so Google Gemini's response, no. Canadian cities generally lag behind top US cities in investment potential. So again, can we end the debate? Which is a better investment, USA versus Canadian real estate? Now, if you're interested in learning more about US investing and where to get started, I'm offering a free training hybrid format for the first time ever, as in we'll have folks here in person in my office. We only have room for about 40 people, 20, 40 people in person, and we're in Oakville, and also will be online via Zoom webinar the evening of Thursday, November 28th, doors at 7:30. And for refreshments and networking, my presentation will begin at 8 p.m. sharp. This will last for probably just over an hour. I'll probably present for about 50 minutes and then take questions for 10, 20 minutes. Networking will likely continue on in person afterwards. As always, I believe in giving value and investment education because the world needs more of it. And I believe investment education should be as accessible as possible. Hence, this event is free and accessible in person or online. So if you can't be here in person, obviously in person is better because you'll be able to speak to me in person, live. And again, but if you're not close by or your schedule doesn't permit, we're available online. So if you have internet, you can join. Every attendee will have factual, tangible, actionable information and takeaways like every episode of the show. but obviously, we're going to get a lot more specific. There's nothing that I enjoy better than helping out the underdog become rich. Helping rich people get richer is great. I love my rich clients. They do a lot more volume and they're easy to work with. But helping young, lower, or middle class, hardworking people who aren't yet rich become rich, that's honestly what gets me out of bed. Along with sticking to the government here in Canada, because they've honestly been pretty rude to us. They've been let it pretty known. They've let it be pretty well known they don't want us here. And how better way than to send a message that we landlords won't take it anymore, than to exit here in Canada and pay less tax to our municipal, provincial, and federal governments who've made it, again, they've made it all known they don't want us here, at least in my experience in the markets I operate in. Now, just look at New Brunswick. They just had a provincial election. I generally don't follow provincial politics outside of Ontario, but they just sent their conservative government walking after 6 balanced budgets out of 8. They're being replaced by a Liberal government who will be implementing rent control of 3% next year. Apologies to all those who ran up to New Brunswick recently for in chase of cash flow. We in Ontario haven't had a balanced budget since 2018, and we're projecting a debt of $419.7 billion. We are one of the most indebted sub-nations in the world in Ontario. Again, if you want to get ahead in life, real estate investing is still the way to go. And on November 28th, I'll be teaching Canadians how to leverage US real estate investing for passive, scalable, and tax efficient income streams. Again, this will be highly tactical. It won't be that funny. It won't be emotional. We won't talk about like how to 10x whatever in your life or goal setting. We're going to talk about hard facts. This is not selling coaching, mentorship courses, joint ventures, raising other people's money, or creating a second job for yourself and taking time away from your family. Nor is this getting rich quick. In my experience, this is about getting rich slowly with the highest probability of success as possible and passively as possible. I've helped over 45 clients of mine already make $1 million or more investing in real estate and can't wait to help even more Canadians, especially from Canadians all over the world. Previously, pretty much all my clients are from the GTA, so I'm really excited to be able to help out more Canadians. Link to register is in the show notes, and I hope to see you there. Now, please allow me a proud parent moment, as I like to share with you my 17 listeners, who I consider my friends. And again, every time each of you see me in public and say hello, it's an honor. It is an honor to meet you all, and it's an honor that you're listening to the show. Cherry and I, you probably all know, we invest heavily into our kids, both our time and money and time, to ensure that they're happy, well-rounded, and prepared for the real world. They work hard, and my son's standardized test just came back, and like his older sister, he scored in the 99th percentile, and so he's going to be tested to see if he's gifted like his older sister is. Now, already the test results are extremely rare, and to have 2 gifted children, which is not confirmed yet, but if we do, this is something extremely rare. I know many people see how Cherry and I raise our kids and think it's not normal, but these results give me great joy and vindication that our parenting is working. But we're not resting on our laurels, and we're not letting our kids rest on their laurels either. We teach our kids every day that hard work trumps talent when talent doesn't work hard, and we'll continue to do so. My fellow parents know, and for those who don't have kids yet, this is my experience, but I don't know what it is, but the kids have brought me more joy than anything else in life, and I like to keep that going. Which is why I don't want my real estate to take more time of my own away from them. Because selfishly, I enjoy being around them. Hence, my efforts to pacify my real estate portfolio by selling off close to half of our local real estate portfolio here in southwestern Ontario, and trading it for honestly better cash flow properties in the States, where I can afford high quality institutional grade property management. Versus it's way more challenging to cash flow here locally. And the reality is way more Canadian investors are their own property managers. And they even do their own bookkeeping, which is something I don't have to do in the States. A long time client of mine just shared with me last week that she has called the cops on her property manager in small town Canada. The property manager is ghosting her and they have her rent money. So my point is, yes, cap rates, yields, cash flow, they are better and higher in small town Canada, but to find quality property management and trades is way harder than major centers. So if things go sideways and the property is far from you, I I feel bad for these investors. But enough about me. On to this week's show. This week we have an everyday blue collar Canadian real estate investor. He's 33 years old. His name is Shayne. He's from Montreal, Quebec, Canada, and he just bought his first investment property. And he's executed beautifully on a BRRRR in suburban Memphis, Tennessee, without leaving home. The ARV, the after repair value, is substantially higher than projected, and the rent came in almost 10% higher than projected as well. So his numbers are phenomenal. He's actually for those who know cap rates, he's at 7.9 on a single family detached home. Shayne is the youngest client of mine by far for the past years. I don't know how long I have to go back to find a client of this age, and I cannot wait to have even younger clients. So I'm personally excited to be part of Shayne's journey to become a successful investor, and for him to become a successful investor and to mentor him in scaling up, not just so that he has a large portfolio, but to have financial peace of mind. This is his story. Shayne's listened to all 350 episodes or so of the show. And if you do enjoy the show like Shayne did, and would like to, see more of your friends, fellow Canadians who want to invest in real estate, be successful like Shayne, especially those who can't afford to get into the Canadian market or want diversification, please share this show with them. And please enjoy the show. Hi, Shayne. What's keeping you busy these days?
The usual, usual day to day. Now I'm getting prepared for the winter, so I got to winterize the house and stuff like that. But just your average Joe stuff.
Yeah. So for context for the listener, you are an average everyday investor. Is that fair?
Yeah, that's correct. Yeah.
On the younger side, especially for Canadian,
Yeah.
you're definitely on the younger side. So Shayne, I didn't
Yes.
know until we got on this call. So you've listened to every episode of this podcast.
Yes. I know that might sound crazy, but like, yeah. So how it went down is I got introduced. I was doing some research, right, on how I can invest in Canada, how I can build up wealth and stuff like that. And then I looked towards the real estate aspect, right? So I'm like thinking, okay, what are the tax implications, right?
Mhm,
So I stumbled on your wife's YouTube channel,
mhm.
and then you came along on one of her episodes, right? So I'm like, oh, this is interesting guy. And then after I found out you had a podcast, I started to be really interested in podcasts. So on my daily drives, I would listen to your podcast, but like your podcast was so advanced that I couldn't start it in the middle, right? So in my head, I was like, let me start at the beginning. Maybe there's some gems I could catch up on, and then yeah, that's how I stumble on some other of your coworkers or affiliates. Yeah,
So that's well over 300 hours of content.
yeah, you got a lot of time, but when you're driving back and forth from work, and it's like 30, 40 minutes. So that's almost a podcast right there.
Mhm. So Shayne, as I mentioned again for the context for the listener, you are my first Canadian client to invest with Share and purchase a property in the States. And just to shake things up as well, I've had requests from listeners to have an everyday person on the show because you've listened to the show. We've had some like serious heavy hitters on the show.
Oh yeah, definitely,
Folks doing
definitely.
like building high-rise buildings, or you know, uh, folks with like 100 Airbnb properties or 50 Airbnb properties, right? It's massive scale.
Yeah.
But you are young. Can you share how old you are? How old you are?
Yeah, so I'm 33 right now, actually. 33. Starting to feel the aches and pains, but but that's just I guess that's somewhat with my job and just life in general, I guess.
Wait till you're my age.
Oh,
So, what sparked your interest in real estate investing?
yeah, so look, I was listening to a lot of people's like podcasts or like audiobooks or whatever, and a lot of them started like well, they make the first millions through real estate, right?
Hmm.
So that's what really sparked my interest. And then, okay, I was like, okay, let me look at the Canadian market, try to understand, try and see if the numbers make sense, right?
Hmm.
And as it was going on, I'm like, wow, it's really difficult to make, either break even or make just a little bit of profit or cash flow,
Hmm.
Then
Hmm.
so I had to find a different way to make that dream happen.
And then, what made you decide on buying in the U.S.? And that's your first investment property, right? Your
Yeah,
the
so
purchase
this
in the States.
exactly. So this is my first purchase, my personal purchase. But my mother, right? I technically I lived in the States briefly when I was a young kid.
Mm.
So Florida was the main state I lived in. My mom purchased a property there in like 2008, 2009 at the crash. So she got a really good deal in Florida, right? And so I understand a bit of the market and I understand that it's cheaper entry level, right?
Hmm.
So when I stumbled on your podcast with Andrew Kim and them, I was like, oh yeah, this is great. So I already know the prices compared to Canada, it's cheaper. It's just that like, how can I do it like not I can't do it physically, but how can I get in there and have someone manage it and look after it for me? So
Hmm.
so definitely it shook my intrigue. It was intriguing to me.
How much research did you do besides listening to over 300 hours of my podcast?
It's hard to say. I do like randomly, maybe. I'm just like if I have some extra time, it's random Google, try to make the numbers work. It's hard to say, but I always say quite bits. Um,
All right.
but like I said, share made it more simple for me to
Right.
uh to proceed.
What did the deals look like locally? So local to you is Montreal, Quebec?
Yeah, so Montreal, yeah, so it depends. In Montreal, it's coming up in prices. So, like for example, if you're looking for let's say a duplex and stuff like that, we're talking about now we're talking about 800 to maybe $1 million now for a duplex. Um,
That's a lot. That's more than Hamilton.
yeah, yeah, now it's caught up like crazy. Before it used to be more affordable. Maybe
Yeah.
I would say back in 2011, you could get like a duplex, triplex in the 500s, and you can make it work, right?
Hmm.
But yeah, everything skyrocketed with the COVID and all that,
Hmm.
the interest rate being low. A lot of people felt like they had more purchasing power,
Hmm.
so definitely shot up the prices, right?
How much would a do you know how much a duplex would rent for? That sells for 800
Oh,
to a
great
million?
question. Yeah, so I would say a duplex currently now you could probably get maybe 1,800 to maybe 2,200
Each unit?
depending on the size. Yeah, depending on the size. Yeah.
That's not very good.
Yeah, it depends. It would really depend. Also, the location probably would also be a factor, right? So yeah, it's kind of tough, and as you know yourself, the increases annually is not that great as well. So
Oh, what's you're limited in your increases?
yeah, definitely. So increase. I believe it's like 3%, 5% or something like that, 3 to 5%. So it's not that great,
Better than
and
here.
also, is it really? Oh, I had no idea,
Oh,
honestly.
our conservative government proudly announces that that at 2.5 rent increase allowed in Ontario is the lowest across Ontario.
Oh my God.
So I'm just
Yeah.
Googling rent. Oh, Google rent Quebec rent increase. Oh, gee,
How
you
much
can
is
read
it?
French, right?
Yeah. We can speak French. Yeah.
Hang on, I'm trying to find it.
No problem.
4%. 4% is the
Oh, there you go.
suggestion from
Okay.
Tribunal Administratif du Logement.
Longement, oui. Yeah. But
4%. So that
yeah,
beats the pants off of 2.5.
yeah, yeah.
Now,
This.
Now you bought in Memphis, Tennessee. So what's the allowable rent increase in Tennessee?
What? Up to your discretion. And basically, you're not really capped, right? Wherever makes sense, right?
So
So
it makes
that's amazing.
so it makes sense why you chose Tennessee. So why did you choose Memphis, Tennessee, the location of your first investment property?
We did just a bunch of research and stuff like that, and as you know, Share has different categories of like properties, right?
Hmm.
So for my first one, I wanted to just try it out and get more cash flow. So that's kind of like a C type
Hmm.
property. So what we did is we just did a global search and we found an off-market deal that matched aligned with what my criteria is,
Hmm.
and it happened to be Memphis, Tennessee, which is pretty cool because I'm a basketball fan. I'm a fan of Memphis Grizzlies, so I'm like, why not, man? That's a perfect place. Why not? Let's start there.
So your property's on the company website.
Oh, you're fantastic.
I think you know that, right? Oh, it's hard to,
Yeah,
including the
that's true.
address. Do you mind to share it?
Yeah, sure, no problem.
I'm literally so for folks who are watching on YouTube, I'm literally showing it on the screen. Now what was the process like? So, how are you informed that this property was available for purchase by you?
Yeah, so basically, I was going back and forth with Demetri. He was like looking through my criteria and whatnot, and this property actually was off market. So off market at I believe the price was 90K, which is fantastic,
Hmm.
fantastic deal. So I'm like, okay, yeah, let's do that. And all in all, with titles and fees and all that stuff, it came out to 105 when it's said and done. And then we decided to do some renovations to spruce it up a little bit and then
Hmm.
put it back on the market. Yeah.
So, like, you're handy, because you are a mechanic by trade. So, are you flying down there to do the renovations?
No, 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 sir.
No?
Yeah, they all took care of it for me. Everything was in a detailed list. Some stuff that we didn't have to do right away. So that's why the renovation costs were lower than expected. But yeah, everything turned out pretty well. It didn't take that too long. It took maybe within a month or two, everything was ready to go.
What was the scope of the renovation? The
Yeah,
initial
so
renovation?
basically like painting cabinets, fixing like mailboxes, driveway cracks, filling the cracks, minor stuff like cosmetic stuff like that.
Okay. And then what was the budget for that?
Yeah, originally the budget was we were spending about 12K, 15K, but in the end we only spent about $9,000, which is fantastic. I don't think you could do that over here in Canada for that price.
Yeah, because on the projected financial, it was actually 25. Is there
Yeah,
is there more renovations planned after the tenant moves out, for example,
probably. Yeah, probably
or
in
is
the
this just to
future we
be,
will.
or was it just conservative estimate?
Maybe in the future we'll do some stuff to update it, uplift it even more. But
Hmm.
yeah, I'm pretty sure that those numbers were conservative, just in case any major you find anything major. Once you open a wall or once you do something, you never know.
Right. So you need 105,000 to close because yeah, that's not including your that's not including a mortgage.
Yeah,
Uh, 9,000 for your renovation, and then the
right.
projected rent was originally 1,100, I believe.
Yeah. So yeah, that was the projected rent, but we have fantastic management, so we actually got an additional $100 on the rent, which is fantastic.
Right.
So I was happy about that. Happy to hear that.
So all in the house was 105,000, including closing costs, plus another $9,000 for renovation. So, oh, gee, my math is really bad. 114,000.
Yeah,
Yeah, 114,000. Yeah, 114,000 includes their closing costs and your capital expenditure, your renovation, and your rent is
right.
1,200 a month,
Correct.
right? So, how you feeling?
I'm pretty ecstatic, man. I feel happy, feeling blessed, man. Definitely.
Your cash flow is very significant then, especially for
Yeah,
for
yeah,
114,000 investment
yeah. I was
property.
surprised. I was not expecting that, but hey, I'm not gonna complain.
And now what's the plan now? Post renovation, you have the tenant. What's the plan now?
Yeah, so we're looking to refinance, right? Pull out some of the equity in the house and then move on to another potential property. Um, hopefully maybe in the B type class
Hmm.
to just to diversify a little bit in
Hmm.
a different state, most likely. Yeah.
Oh, okay. Do you have your eyes set on any particular market?
Not in particular. We're looking at different places like Alabama, Kansas, North Carolina, Georgia, maybe. So I'm open to whatever makes sense,
Yeah.
basically.
And that's what I found as my initial challenge with the States was, uh, I think you know me, right? I like economics and job growth and all those things that drive real estate prices, in migration, immigration, all those sorts of things. And there's just so many markets that
Right.
fit a buy criteria, like a
Yeah,
yes to buying in that area.
definitely. Yeah.
And yeah, so actually, before we were recording, we were discussing. I was showing you that query I did on ChatGPT. I'll just show it quickly on, on here as well. So
Cool.
yeah, you've done a fair amount of research as well. So for the listeners' benefit, I'll read out the query I asked ChatGPT. Which provinces or territory in Canada would you rank ahead of the top 10 US states for long-term residential real estate investing? Question mark. Factor in how income properties in Canada must be personally qualified for versus in the US, it's the debt service coverage ratio mortgages. And then there's a response, there's a long response. Again, that's on my screen. But if we go down to skip it right to the conclusion, in short, while Ontario, BC, and Alberta offer unique benefits, they don't hold up as effectively against the top US states when factoring in debt service coverage ratio financing and other pro investor advantages. So, like I was joking around before, like, let's mic drop.
Yeah,
The debate's
100%.
over. We're the best place to Canada versus US for long-term residential real estate investing. Yeah, so you've now had a taste for it. You ever gonna buy a local investment property again? Ever?
Most likely not. Most likely not. Unless things changes, but I highly doubt it. Yeah.
Have you told your friends and family about what you're doing in the States? What do they think?
Yes, I spoke to my aunt. My aunt is more into this kind of stuff. She lived in the States for 10 years in LA, so she's familiar with what goes on over there. So I spoke to my aunt and a few of my friends as well. I'm trying to get them on, trying to bring them with me.
Which I think is noble because I've made the joke before, like friends don't let friends invest in substandard investments.
Correct. Yeah, definitely.
Right? And actually, do you know how long, say a tenant in Montreal doesn't pay you, how long until you can resolve that issue?
Yeah, so I think it's similar to Ontario. I was reading it through the forums and the Facebook groups. I think some of them are like up to a year or a bit more than a year to get resolved from the government or the agencies that are in place for that. So that's crazy. Imagine someone not paying you for a year or more.
That
That
would,
has to hurt.
well, just think about yourself. Could you survive?
No, yeah, definitely wouldn't be able to survive. I would definitely have to get like two, three jobs just to support that, probably. Yeah. Yeah.
Yeah, when people get into investment as a side hustle for it to be passive, and then you're saying you have to get several other jobs in order to support your tenant not paying your rent. That sounds
Yeah,
like
which is
an awful
yeah,
alternative.
yeah, definitely a nightmare. It's something you don't want on your worst enemies for sure.
And then how did you set up? So you're Canadian, right? You have,
Right.
all right. So how were you able to own a US property?
Yeah. So basically, with the share team, we set up my LLC, and also we set up a LLP. So that was pretty much hands off. I talked with Share and just sent me over the documents, and I just filled it out, and then bam, I had my business LLC and LP ready to go and to purchase properties in the States. It was pretty seamless.
What kind of financing options are you seeing to refinance your Memphis property?
Yeah, so currently right now it's kind of high. We're looking at this like 7% or maybe high sixes to refinance.
Hmm.
Some are able to you could buy down with a certain amount of money. That's one of your options.
Hmm.
Um, yeah, so that's pretty much where we're seeing right now. Maybe it'll change. I know that US is breaking down the rates as well, so hopefully later on it comes down, but that's what we're
Hmm.
seeing currently.
Hmm.
Yeah,
Yeah, because we're in the middle of a rate cutting cycle in the States as well, just like Canada.
right.
So are you just gonna be patient and wait it out, or just gonna bite the bullet
No,
and take one of these rates?
oh yeah, definitely. Definitely we're gonna see because right, the right if the right opportunity come, it's better to be in than to wait and for the right opportunity, and then it's better to be in. Like you said, real estate is like a long term game, right? So once you better to get in early, wait. You have another chance to refinance to go down to another
Hmm.
lower rate. So
Hmm.
as
Hmm.
long as the deal makes sense.
Now, was there a piece of advice or moment from the podcast that you found especially valuable that, that was a catalyst for you to start investing?
That's a good question. I this is majority of your your guest speakers or whatever just say um basically just take a chance, basically take a chance and see how, where it's going to lead you because you don't want to be like 20 years later and figure out, oh man, that the property I looked at, you know 20 years ago, look how much it has grown, and I had the opportunity to jump in and have a regret.
Hmm.
Sometimes the biggest reward is it's the biggest chances you take in life, right?
Hmm. Hmm.
So that's why I gained a lot from your guest speakers, and I said, why not? I'm young. Let me try it. If it works, it works. If it doesn't, I still have time to pivot, right?
I remember 10 years ago, I was at a real estate networking dinner, and I was sitting between two gentlemen that were, one was probably high in his upper 60s, one was in his 70s. And they're like, they're chatting. We're in a conversation together, and one was saying, I wish I started 5 years earlier. The other guy said, I wish I started 10 years earlier. And then they both look at each other and they look at me. I wish I started when I was your age. And they pointed at me.
For
So
sure.
I would have been close to your age at that time.
Yeah,
So I don't know if you realize, but there's a whole bunch of real estate investors who would love to have been your age when they got started.
for sure. I believe you had someone younger than me too. Me personally, I wish I started at his age too. So the cycle continues.
Well, and that's the thing. You're probably referring to Joe Costanza because I think he was 26 when we started working with him, and
Right.
then I even poke him as well, and I said, if you were getting into the market today, how would you do it? Because it's so much more expensive than it
Right.
was 5 years ago, even.
Yes.
Right.
Yeah.
So for listeners looking to start their journey, especially Canadians eyeing at U.S. investments, what would you be your biggest piece of advice to them?
Good question. Just do it, man. Like Nike says, just do it. Just get into it. Do all your research. Yeah. See if it makes sense for you
Hmm. Hmm.
at first. Reach out to people, like your guest speakers, and ask some questions.
Hmm.
Ask
Hmm.
questions, figure out, see it aligns with you, and
Hmm.
then go from there.
Hmm.
That's what I'll tell your speakers. Yeah, definitely.
What was it like for you to be, you know, living in Montreal and there's a renovation going on at your property in Memphis? How were you made aware of updates?
Yeah. So basically, it's pretty simple. They will send me emails, progress photos, before and afters. It'll be constant in the loop. So within a week or so, every week or 2 weeks, I get an update where we at, um, if there's any hiccups or anything like that.
Hmm.
And then the estimated time all the renovations will be done. So it was pretty relaxed. I didn't feel any stress.
Hmm.
It was pretty seamless. Yeah.
Question: have you run the numbers after you refinance the property? What your cash flow would be?
Good question. Actually, I haven't. No, I actually haven't. Actually haven't.
I'll run it later, and I'll actually I'll ask Demetri for it, and then I'll share it.
Ah,
I'll share it in the show notes, folks. As long as you're okay with that, I'll send it to you
yeah,
first. How's that?
that's fantastic. Dimitri's the right guy to go to. I'm not the professional, so that's better. Yeah.
So, for the listeners' benefit, Demetri is the chief investment officer of Share. Like Shayne, how did you know? Again, you're in Montreal.
Right.
uh, Demetri, you've never met him in person.
No,
How did you feel comfortable with this purchase?
just having like talks with him on the phone. It's very easy to talk to. Like, he asked me my input. What am I looking for? What's my future? What's my plans in the future and stuff like that.
Mhm.
And like from that conversation, I felt really comfortable. And then we went, you know, week by week, we talk on the phone and talk about strategies, talk about different avenues we could go.
Mhm.
And then over that time, it felt at ease. So I had 100% confidence in Dimitri and what he's going to provide for me.
Fabulous, and you could understand what he's talking about because when I first met Demetri, like he thought, I have some real estate experience,
Right, right,
but he's used to working with like pension plans. So
for
folks
sure.
with like massive, like lots of letters behind their names. They have MBAs, they have CFAs. Some of them probably CPAs as well. Like he's used to talking to folks who have millions upon millions of, or even billions to place. So, but you felt comfortable
Right.
talking to him?
Yeah, I felt comfortable talking to him, but for sure, if there was like some terms I didn't understand,
Yeah.
ChatGPT was there to rescue me, or I had to do my own research and like try to retain the information.
Fabulous. Because
Yeah.
when he sends me your pro forma, I'm gonna stick it into ChatGPT as well.
There you go. Dumb it down to like a 5-year-old.
Yeah.
Explain it to me like that.
Because I'm pretty sure most everyday Canadians would like your deal. I would like your deal.
Sure, for sure.
Oh, have you had it appraised yet? You haven't, but I sure can run the numbers. They can take a good guess what your property is worth now. Do you actually know?
Yeah, I think on the website it said about it's probably worth 136,000 maybe now with the renovations estimated.
Okay, 136,000. That's an improvement of $22,000. That's it's funny because I was having a conversation with a friend. I have lots of friends. I don't have a
Right.
lot of friends. I lie. He was chirping me like saying, as much as you know what's going on in the world, I don't see why you're adding more Bitcoin to your portfolio." And like, yes, I'd love to have more Bitcoin, but I can't get these equity uplifts in gold or Bitcoin like I can in real estate, just like you did from
Right.
the comfort of your home in Montreal. You got an equity uplift of $22,000,
Yeah, that's fantastic, isn't it?
and you're
Definitely.
and it, like on the website, your property's a 7 cap, which is understated because you got more rent and your renovation was smaller. So again, I can't wait to see what the the updated financials look like. But holy cow, what a deal, especially in your first
Yeah,
property.
yeah, pretty much struck gold right now. That's pretty awesome.
Like I appreciate like so we just had our US investing workshop a weekend or two ago, and literally I had a gentleman in my office. He paid $900,000 for a two-bedroom condo. It's facing the lake, Ontario. It's GTA West, and he originally priced the rent at 2,900. He couldn't get it, so it kept coming down. For a two-bedroom, he got like 2,400. 2,400
Oh my
rent
God.
on a brand new
Mhm.
condo that was lake facing that he paid $900,000 for. And he's not a chump either. He's a realtor. I believe he's a realtor. He's
Okay.
not a chump. So he's negative on hard costs. He's negative 2,000 a month, right? So if he has a vacancy or if repair, it's way worse than 2,000 a month,
Oh,
right?
oh, yeah, definitely. Oh, I wouldn't want to be in those shoes, man. That would hurt me. Oh man, depression was set on me on that point. Yeah. Ooh, that's a
Yeah,
hard.
like you have to put up to put up money that much capital for a $900,000 condo and then have it take money from your pocket every month. Ooh, two
Yeah,
thousand bucks.
yeah, the
All
wife
right.
won't be happy for sure. That's for sure, brother.
You have a wife?
No, no, no. Not yet, not yet. At least not yet, not yet, not yet.
So, looking 5, 10 years out, where do you see your portfolio in your financial goals, and how does real estate fit into your overall vision?
Yeah, definitely. So, my plan is to grow at least maybe try to get at least one or two a year. Ideally, probably set up to 10 and see how it goes from there. Definitely, the more the better.
Hmm.
Like I won't complain about that, but
Hmm.
definitely my goal is to get a good amount to cover my expenses
Hmm.
and have my primary job be my secondary job. You know what I
Hmm.
mean? So that's the goal.
Hmm. And do you get a pension at your work?
Yeah, I get a pension. I work for the federal, so we have a
Uh-huh.
government pension,
You got a
which is
decent one?
it's pretty good. I can't
Okay.
complain. It's a defined benefit, so it's pretty good.
Fantastic, fantastic. Just because I had a previous guest who's RCMP, and for federal pensions, that's I think it's on the lower end of quality.
Oh,
Just
it's a really.
I'm no expert, but it doesn't for people in the line of business who get shot at. I can't believe
Oh,
they don't have a
okay,
better
yeah.
pension.
Yeah, from that aspect, okay, yeah, you're right, you're right. Their life is on the line. Yeah, I'm
Well,
not in those shoes, but
yeah.
yeah, that for
Even if they
sure.
don't get shot at, if I compare it to like a teacher pension or like a federal employee, like someone who works for the federal government, like
Mm.
CRCMP, I don't think they don't get the same pension as like a someone with a desk job in Ottawa. You know what I mean? But yeah, I'm no expert, but it doesn't seem fair
No, no, they're
in the world
deserving
of
of more.
pensions.
They're definitely
I,
deserving of more for sure.
I would say that too.
Yeah.
All right. And then when you vision your portfolio, what cities and states do you think you're in?
Yeah, so hopefully a little bit everywhere. So like Kansas, Alabama, Georgia, maybe Texas, like yourself. We'll see how that goes. Um, yeah, those maybe those mainly those areas and
Hmm.
see if there's any opportunity elsewhere as well.
Hmm.
Yeah.
So why do you choose the geographic diversification? Because if you invested locally,
Right.
would you do the same? Would you have like one in Montreal, one in Toronto, one in I don't know Oshawa, one in Burnaby, British Columbia? Why do you envision geographic diversity?
Well, just for protection, right? You never know what's in store for in the future, right? So just having um, properties in different states, it's kind of like a shelter, just in case one is performing well, one isn't performing as well. There's renovations here, there's a big issue here. You just have overall a good comfort zone.
And then how would you execute this? Are you going to fly down to each of these markets and, meet wholesalers, meet property managers, realtors, you know?
Oh, that's why I got share, man. They got my back, you know. So that they're very versed in multiple states. So if anything aligns with my idea or my criteria, they'll shoot me an email and we'll go from there. Yeah.
You're a young guy.
Yeah.
And you're handy too. Why don't just fly down and be your own investor?
Uh, that's a lot of work. That's a lot of work. A lot of time. You know, I don't think I have that much time on my hands, unfortunately. But yeah. Why they do that if I have share on my team? They got my back. They proven to me for my first property that they're capable of doing what they say they're able to do,
Right,
and I have much confidence in them.
right. And so when you're talking to your friends and family, like you're telling them to go share, or you're telling them to go book a plane ticket and interview a bunch of realtors and wholesalers and property managers, or no?
I'm definitely telling them if hey you want peace of mind, you want to have your mind at ease, hey share's the way to go, man. Share's the way to go. You'll sleep easy at night.
Yeah, like when you mentioned earlier, even in Montreal, it can take you a year to deal with the non-payment of rent issue with a tenant. Like I think people
Yeah.
lose a lot of sleep.
Oh, definitely. Loss of sleep and they could go crazy. You know, you never know what could happen, especially if it's like a property that has maybe sentimental value. People could change on you, you know.
Hmm.
It's not good. It's not good. You should be able to receive, you know, and if you're providing, you should be able to receive, right, at the same time. So
Hmm.
it's only fair.
Any plans to go visit any of these properties?
Not necessarily, but maybe I'll go see the city myself and
Yeah.
maybe pass by and say just to see how it looks. But no, no plans in the future currently right now. So
Oh, awesome. Yeah, I'd like. I've never been to Graceland, which is just outside Memphis, so I'd like to one day.
yeah, definitely.
All right, Shayne, thanks so much for doing this. Do you have any final thoughts you want to share with the listener? Again, you've listened to over 300 episodes of this show. What are some parting thoughts? I'll
Um,
leave the mic to you.
oh my gosh, no pressure on me. Okay, so basically, from all the episodes I listened to, the main one is just try it. Do your research first. Obviously, do your due diligence, but just take the leap of faith,
Mhm,
and see how it goes. Because it could be turned into an opportunity that changes your life
mhm,
and changes your family life and
mhm.
the generations to come. So that's my advice.
I will add, I don't know how much faith is needed when research is easier than ever.
That, that that's for sure. That yeah, ChatGPT it's pretty easy. Just put where you're thinking
Yeah.
and gives you the results.
What are some prompts you think people could use in ChatGPT if they wanted to do research into real estate investing?
Okay, yeah. So like probably some of the terms like major terms like cap rate, stuff like
Mm.
that. Something that average Joe wouldn't know, right?
Hmm.
So like
Hmm.
how I do it is like I say, okay, ChatGPT, explain this to me like a 5 year old or a 10 year old, you know, and they use maybe the piggy bank explanation and stuff like that. So for a common person like me, it's simpler to understand and retain the information. So stuff like that, like it makes your life much easier to understand.
Hmm. Yeah, I plan on like project pro formas, projected financials aren't that available. Actually, they're somewhat available. Actually, no, they're not. for again, because I'm on a lot of emails as well, so I get projected financials for a lot of properties, and then you've seen the way Shared does them. They're incredibly detailed and transparent. So I actually plan on having to finish off a proper projected financial pro forma for like local properties and just feeding it to ChatGPT and like you tell me what's better.
Yeah,
I
that's
think the everyday investor can do that as well. Like you want an unbiased, as good as it gets, unbiased opinion on what the best investment is. AI's ChatGPT is it. What do you think?
exactly. Yeah, exactly. That's how I did also with the my refinancing options as well.
Mm,
So I like add one or two options. I'm like,
mm,
okay, then put this in ChatGPT and it breaks it down the comparisons.
yeah,
What is advantage for this option and what is
yeah,
advantage for this option
yeah.
and the disadvantage between the two. So yeah, it's pretty simple. You just have to put it in and read the what it gives you, and you could go based off on that. So definitely easier than
That's super cool. Do you find many of your friends and family and people your age are they using ChatGPT?
I would say more people my age or younger are using GPT. The older people are some of them are not tech savvy, unfortunately. But
Mm.
oh yeah, I definitely see people around my age or younger, definitely younger. They're all over there, you know, with the technology. So
Hmm.
they probably know more than me.
I was actually planning on doing an interview with ChatGPT on Canada versus USA for investing.
That'll be
If you want
amazing. That'll be amazing.
unbiased, because listeners need to understand. Like I've covered this before in one of my other talks. Like uh, ChatGPT has passed the bar exam in the states. It passed. I think it was Wharton's MBA school. So Wharton is a but easily top five business school within the U.S. Right?
All right.
Like and it keeps getting better. It's just scary how good it is, and this is why I warn folks who are have businesses in anything, especially well, for my show, I'll mention it for like real estate agents and mortgage agents and brokers and whatnot, especially if they're focused on investors. Like technology is coming for everyone's job, right? Not your job
Oh
because
yeah.
you're hands on, but
Oh yeah. For at least for now, who knows? The robots. They will have some robots out there that
nah,
Uh, not yet. Okay. All
no.
right. All
You
right.
know, everything I've seen, like anything to do with like repairs and maintenance, like that's so far down the line for robots. That's just way
Okay.
too hard, right? Like robots can do new because it's the same thing over and over again, right? We already see that in automotive manufacturing, right? It's already largely robots, but for any sort of like maintenance, yeah. Well, you tell me, you're in the shop, not me. Right. But just think, can you see a robot like replacing your toilet at home?
The- You're right. Not at least not yet. Maybe in the future, who knows? But
Yeah.
currently, no. I
It's
don't see
just so
that.
far down the line. Like so,
Yeah.
yeah. Yeah. All right, Shayne, thanks so much for doing this.
Oh
Um,
man, it's been an honor. This is awesome to be on your podcast, man. I'm a fan. I've been listening, as you know from the beginning, and I'm really humbled to be on this podcast. Be one of your guest speakers. Thank you very much.
and Shayne, just throw it back to you. It's always been my honor to host this show and help people, especially the everyday investor, especially younger folk like you who don't come from a pile of money or already don't have a pile of money, right? Like
Yeah.
I tell friends and family, if you want to get rich, you need to be in real estate,
Hmm.
right? From my experience, I've never seen an easier asset class or strategy for people who don't have money to get money, right?
Yeah.
Obviously, you
Yeah.
need to have like you. I'm guessing you worked and saved, and that's how you were able to afford the investment. Is that fair?
Yeah, so yeah, majority is worked and saved, but also
Mhm.
like I have received money also from like family. So from the most part, yeah, it's my my heart, blood, heart, and sweat, tears, all that stuff.
Mhm.
Um, I worked 2, 3 jobs. That's nothing new to me. I
Mhm.
slowed down a little bit, but that's how I get down, So yeah, so definitely trying to offset that with the real estate.
And in my experience, I don't see a better way to do it.
Yeah.
Shane, again, thanks so much for doing this. Thanks for being my first U.S. Canadian client buying in the
Uh,
U.S.
that's awesome, man. Thank you very much for having me. We'll talk soon, huh?
All right, friends, that wraps up another episode of the Truth About Real Estate Investing show for Canadians. Hope you got as much out of this one as I did. Remember that whether you're just starting out or a seasoned investor, there's always something new to learn, and it's always about building that practical knowledge base that gets you closer to financial freedom. If you found value today, please do us a favor and leave us a review or a rating. Share this episode with a friend, or better yet, join our community of real estate investors who are taking action and making moves. And hey, if there's a topic you want us to cover or have, so there's a certain guest you'd like us to have on the show, drop me a line. My DMs are open on social media. Reply to this email that this have arrived on. I'm not hard to find. We're all about getting you the unfiltered truth to help you on your journey. Thanks again for tuning in, and we'll see you at the next episode. Until then, stay smart, stay curious, and keep building that future. Catch you later.